This is our Forex blog for July 29th, 2013, and one of the easiest ways of trading is using our currency index, which allows you to actually see visually what each currency is doing, whether it's going up or down, whether it's underneath its hourly moving average, if it's above or below its previous day's low, when it breaks down underneath the previous day's low, which oftentimes tends to lead to trends, especially when it starts off near the previous day's low. Starting the day off tends to go significantly. Once the support level like the previous day's low is broken, it tends to become resistance. Let me make all these charts the same color so we can scroll them back and see them all at the exact same time. It's very easy to trade with this. Basically, you want to buy the strongest currencies versus the weak and sell the weakest ones versus the strong. That's it. That's all you have to do. Okay, I've made them all the same color, so when I scroll back, it will allow me to see the currencies at the same time. So here's the ones you want to focus on buying. The dollar, when it's above its hourly moving average, keep in mind it's underneath the previous day's low, especially when it gets back into the range after here at 8. The yen, above its hourly moving average all day and find support here. The pound, for a brief amount of time, you want to buy it here. Underneath, from 6 onward, you want to look for sells. The CAD, it's kind of chopping around and breaks out right here. Anytime you see a rectangle pattern breakout, it tends to go up. Keep in mind this is the previous day's low, so it could act as resistance once it breaks above there. It is pretty far down to be underneath the previous day's low, so you got to be careful. The Australian pretty much broke down earlier in the day, so that's a great one to be selling. If you sell the Australian when the dollar breaks out above its hourly here at 2, this one's trending down, had a little bit of a pullback, it's likely to go back down. This one has been going sideways and broke out. The Australian dollar at 2 o'clock, great one to be selling at 2 o'clock. Let's just show this chart here, and you can see there's a little bit of a pullback. It went from around 92.60 down to 40. You get a little bit of a pullback, 15 pip profit, a little short here where you might have lost, short again here, small profit, short again here. Pretty decent profit. You can always use trend lines, either draw them or just visually eyeball them to get in and out of trades. You can see the yen was strong all day. It pulled back. It was very likely to go up here at 4:30 or 5 when it found support at the hourly and kind of went sideways. Which one was weak at that time? You can see the CAD, which was strong most of the day, just broke down at the exact same time. The Swiss is likely to reverse down because it found resistance here at the hourly. The dollar just broke down and is retesting here. So I would trade and look for dollar yen sells, and especially CAD yen sells close to 5 right here. When you use the currency meter, basically when trades don't work, you have very small losses, and when they do work, close to 5 right here, you can see, breaks down at 95.30, falls down about 22 pips. You put your stop over the last little high before the breakdown, and you're risking 10 pips to make 20. And a lot of times today was a pretty dead, crappy day overall, but most of the time when you see currencies breaking key support resistance, you can use trend lines on these, and when they break down right here at 4, you could actually look for sells. At 4 o'clock, the yen was kind of going sideways. At 4 o'clock, the euro broke out. So at 4 o'clock, you could have bought the euro CAD and more than likely made 20 plus pips. Here's 4 o'clock on here. You saw the euro break out when the trend line on the CAD broke down. We also have a trend line over here breaking out at the same time, and it went from around 36.34 up to 55. So it went up about 18 to 20 pips. Now obviously the euro didn't continue up. It failed to make a higher high, came back down, came back underneath the previous day's low, and at that same exact time the CAD kind of took off to the upside. So later in the day the euro CAD was one to sell. Today was a tricky day for the most part, but if you look to sell the weakest ones, especially on pullbacks, if you get a currency that's been going down for hours and you get a nice little pullback right here, this is a very high probability place to sell the pound, and you want to sell it against whatever is the strongest. You can see the CAD is about to break out and make new highs for the day. You wouldn't trade it against the New Zealand or the Australian. The Swiss is weak at that time. At 9 o'clock, you can see the euro just broke underneath its hourly, so it's weak. At 9 o'clock, the dollar has pretty much made new highs for the day, and it's pulling back and retesting its previous day's low. So selling the pound dollar at 9 o'clock makes a lot of sense. Probably going to make 20 or 30 pips. And as you can see on this chart, you also have a nice little pullback after this thing's been going down for hours. Nice little pullback. You get short right there with your stop right above the high. And you can see it fell from around 53.60 all the way down to 30. 30 pip move. You're never going to catch every pip, but you're likely to make 15 to 22, 23 pips minimum, which is more than double, or it's potentially more than double what your risk is. And that's the key to trading. Now, for those who don't want to learn how to trade or use our currency indexes, I am working on, I use these on range charts. I am working on signals that will pretty much, tell you what to do and when to buy and when to sell. Today was a very hard day for our signals, but they still did well. I mean, the market kind of drifted down without any kind of pullback, drifted up without any kind of pullback, drifted down without any kind of pullback. Basically you want a trend that's down, and you get a pullback and you look to sell, it rallied up, you look to buy, and so forth. When the market just kind of drifts one way, drifts up, drifts down, it's very hard for our pattern-based signals to find trades. But you can see how our trading systems did today, mostly wins. You can see we started the day off with 2 small losses here, found the high, it went down, bought here, it went up, sold here, eventually went down. This one here was a failure. Nailed the low, nailed the high of this, nailed the high of this, which was a pretty decent move. Small profit, small profit, small profit, big profit, decent sized profit. There's no trade there. And then it got short right here, which just kind of drifted down a little bit. But you can see if you bought here, you lost a little bit. Bought here, you lost a little bit. You pretty much broke even on these trades. This one you lost. And this was a tough day. Most days our signals do significantly better than this, as you can see on the previous day here. We're basically buying, sold here, bought, very small profit, very small loss, decent profit, big profit, decent profit. Most of the time our signals do pretty well. You want to use these. One thing you can do that will enhance your profitability is use our signals, which we hope to release in the next maybe a week and a half, 2 weeks. Use a tool called FX Value Areas Intraday, and use either 60 or 4-hour data. And what this does is it shows you where most traders have positions over the previous 4-hour period. So the previous 4 hours, this is where most traders have positions. So you don't really want to be buying right underneath it or here. If it's above the point of control, you're better off looking to buy. This trade should have worked. It didn't. When you're underneath the point of control, if you look for sell, as you can see, these trades mostly all worked. You know, and if you're above the point of control and it's far enough away, you can definitely take the trade, but it's very likely to be a support area. You know, so again, above the point of control, focus on buys. Below the point of control, focus on sells. And you can do that, you know, with any currency. It's much higher probability trading when you focus on buying above the previous 4-hour or previous hours most actively traded price, and, you know, trading in the opposite direction when it's underneath it.